Transaction number 6. You buy stock again, but this time on credit, 15,000 Rand. So once more, you've got stock, which falls under trading inventory, which is an asset. So, therefore, I've got more assets. My assets are increasing. But this time I didn't pay for it. I bought it on credit, meaning I owe the money. I owe is a liability. When I buy stock on credit, I increase what I owe to my creditor, and therefore my liabilities will increase as well. My accounting equation balances my increase of 15,000 Rand to my assets is equal to an increase of 15,000 Rand to my liabilities. The next transaction, you sell some of that stock on credit. So the bank is not involved, right? Now there's two prices here. The 20,000, that would be my selling price, and the cost price is 5,000. But because there's two prices, we're going to treat this as two separate transactions. So I'm selling stock on credit for 20,000 Rand. Now if I look at my accounting equation, there is an account called sales. Now sales is an income. I am earning 20,000 Rand and I don't have to give it back. That makes it an income, which makes the owner richer. It increases his profits. I'm not selling it for cash, I'm selling it on credit. That means I have a debtor. A debtor is my customer who buys from me on credit. A debtor falls under assets. Anything that is money or will become money. When the debtor pays me, it will become money. So therefore, my assets are increasing. Might not be money right now, but it is money in the future, something that will become money. Therefore, my assets are increasing. My sales is an income, and the owner is richer. But remember, not that whole 20,000 is all his. When he bought the stock, he had to pay for it. Let's look at that transaction again. The cost price is 5,000. Now that cost price is the stock. Now at number 5 and 6, when we bought stock, we increased our assets. Now an asset is something that is money or will become money. So when we buy the stock, it's something that will become money. So we put it under assets. But now we've sold the stock. So now it's not an asset anymore. It's gone out the door with a customer. We do not own that stock anymore. So therefore my assets have decreased. I have less trading inventory. Now that stock has become something that I've paid for and now will not get anything back for in the future. It will not become money in the future, and therefore it has now become an expense. So we are moving the trading inventory or the trading stock from the asset account, trading inventory, to the expense account, cost of sales. My selling price, 20,000, minus the cost of what I've sold, cost of sales, 5,000, gives me a profit. Profit is income minus expenses. Income, 20,000, expense, 5,000. Means I've made a profit of 15,000 Rand. Check your accounting equation. An increase of 20 is equal to an increase of 20. A decrease of 5 is equal to a decrease of 5. So remember, when you've got two prices, you've got two transactions. The next transaction, number 8, pay 14,500 to settle our account. When a sentence starts in the middle like that, just put the word you or I or we in the front of the sentence and it'll make sense. You pay, we pay, or I pay 14,500 to settle our account. Then it makes more sense. Now our account of 15,000 Rand is with our creditor. So we owe our creditor 15,000 Rand and we are paying 14,500, less than that, to settle our account. Means to clear our account, to pay it off totally. Now you can see that 14,500 doesn't clear 15,000. So therefore we got a discount. Hey, the discount is the difference between the 15,000 that we owed and the 14,500 that we paid to settle this account. So the discount then is 500 Rand. So we are paying 14,500 Rand to pay some of our debt off, and the other 500 Rand is a discount given by our creditor. So there are two amounts, and we will therefore do two transactions. Firstly, we are paying 14,500, which means the money is coming from my bank account, which is an asset, and therefore my assets are decreasing. What am I paying for? I am paying a creditor. That means I'm paying somebody who I owe. Means I'm paying a liability. When I pay a liability, I owe less. I decrease the liability. My accounting equation so far is balancing. The difference between the 15,000 and the 14,500 Rand, that 500 Rand, is a discount that my creditor has given me. So we know there's an account called discount received. Now that is an income, right? I owe my creditor less, 500 Rand less. So do you agree that I decrease my liability further? And can you see that the two transactions, or the two green numbers together, have decreased my liabilities with a full 15,000? Some of it was money, but the rest was not money, so it needs to be dealt with separately. That is a bonus for me, and bonuses are incomes, or incomes are like bonuses. It's money in my pocket that I don't have to give back. So I'm increasing the owner's wealth by not having to pay as much to my creditor as originally planned. My accounting equation for the second part of transaction 8 also balances. Plus 500 minus 500 gives me a 0, which is equal to a 0 under my assets. So my creditors, my liabilities, decreased twice. Once because I paid them and the money decreased my asset, and the second time because I received a discount, which is money in the owner's back pocket. Let's look at the last transaction. We received 19,000 Rand from a debtor. A debtor is that asset. The debtor is the guy we sold to there, number 7. Hey? We received 19,000 Rand from this debtor to settle his account of 20,000. So we're basically giving him 1,000 Rand off. Now when we sold to him, we said we had a sales price of 20,000. We had a cost price of 5,000. We made a profit of 15. But now we're giving him 1,000 Rand off. So that profit must come down a bit with 1,000 Rand. So therefore that 1,000 Rand discount is an expense, and we call it discount allowed. So we are receiving 19,000 Rand from a debtor, and we are allowing a 1,000 Rand discount to my debtor. So again we've got two transactions. Let's deal with the money first. It's always the easiest. My money is increasing. My debtor is paying me 19,000 Rand. My debtor, who is an asset, is decreasing. He owes me less. So I'm exchanging one asset for another. My debtor, I could see him as money later, and now he's paying me. So that money later has become money now. I don't know if that makes sense to you, but it makes sense to me. I'm decreasing what the debtor owes me and exchanging it into cash. Exchanging one asset into another. Now the difference between the 20,000 and the 19,000, as I said, is a discount that we have allowed our debtor, and that is an expense to me. So my debtor is decreasing with 1,000 Rand because we are giving him a discount. He still owes us less. Can you see we've decreased his account with the 19,000 and decreased the debtor with the 1,000, decreasing the entire debt of 20,000 Rand from my debtor. He now owes me nothing. But that 1,000 Rand is not cash, so I'm not going to plus under assets. I'm going to write it off. The owner's back pocket is feeling this one. Under owner's equity, with transaction number 7, we increased our owner's wealth with 20,000 Rand and decreased it with the cost price of the stock of 5,000 Rand, making a profit of 15. And now at number 9, we are losing some more of that profits. That profit is coming down with 1,000 Rand because we allowed our debtor a discount. Remember, more expenses means less for the owner's equity. That ends this little accounting equation exercise. We're going to now look a little bit deeper at that double entry system that I spoke about. And we're going to look at some debits and credits. What does it mean? And an easy way to remember which accounts are debited to increase them, which accounts are credited to increase them. And I'm going to teach you two little acronyms, DED and CLIC, and how to use them. But again, make sure you've got that list in your head before you start with the next video. Try this exercise again by yourself and mark it and look at it again and make sure you understand it before you move on. It's like building blocks. Make sure the first building blocks are solid and firm in your head before you go on. Otherwise, you will end up getting yourself confused and getting left really far behind, and you can't afford that. So that list, 10 times a day, in your head before you start the next video.